Hey traders, welcome to a new market outlook video. In this video, I will analyze the various currency pairs, show you the market trend, give you the key levels to watch out for so that you can best prepare for the new trading week ahead. Now, I'm going to be using the MPE trading strategy, which I teach in my 3-day trading guide over here. So this is a 3-day trading guide. In case you have not gotten it, please go get it first because I'll be using this MPE trading strategy to analyze the market. So just as a very quick refresher, what the MPE stands for, M stands for market condition, P stands for price level, and E stands for entry. So I'll be using this framework to analyze the various currency pairs over here. Now, please do take some notes about what the key levels are so that you will not buy into resistance or sell into support during the week. Now, we always start off with the Forex factory to have an idea about what currency pairs can move and what we should focus on. So right here is the Forex factory economic calendar. So you can see that next week is a rather light week. You don't have really much major news, and the news are actually hard economic data. So we have the Aussie news on Wednesday, the employment change and the unemployment rate. And we have a couple of Euro news on Friday. Now, if you are new to this channel, one of the things that we talk a lot about is that we always study the Forex calendar because the Forex calendar tells us what kind of trading week this is going to be. So looking at this Forex calendar, next week is probably going to be an easy week to trade. So you definitely want to take advantage of that, take note of the key levels and trade alongside with us. Now, with that being said, let's move into the charts. Let me just clear everything up and walk you through the key levels that I'm looking at and apply the MPE trading strategy. Okay. By the way, I'll leave the link to the MPE trading strategy guide in the description down below. Okay, it's totally free. So make sure you get it because if not, you won't understand how I actually analyze this chart and it won't make sense to you. Okay, if you have previously read it but you don't remember, then just scroll over to this portion, the MPE price action strategy, and reread it. It doesn't take you more than 5 minutes, and then watch this video. You understand it better. So this is the euro dollar. Okay, so if you look at the euro dollar, the long-term trend is actually an uptrend. It's very clear because you have a high, you have a low, you have a higher high, higher low, higher high, higher low, higher high. So we're in a very clear uptrend. However, the recent price action from the top down here, you can see that price corrected a bit. And if you were to identify the swing points, okay, which is actually the first step in the MPE trading strategy, market condition, you will see that price it's in sort of in a downtrend currently. You have the low here, you have the high here, and you have a lower low. So right now, the immediate trend is a downtrend, and right here we have the resistance, which is given by this level over here. You can see that price bounce off here. It was resisted, support, after that resisted here. So somewhere around 1.2148 is the key level. So ideally, right now price is stuck between this level and this level, which is 1.2072. And if you look to the left, this is actually somewhat like a left shoulder hit and potentially a right shoulder. So right now, euro dollar is a bit tricky. The best would be to wait for price to break above this before buying. Okay, because if you were to buy here, then you need to worry about this resistance here, which is pretty close. Okay, so my bias would be still to buy. Okay, but I need to see that this is broken. I need to see that this resistance is broken. And let me just draw it first. This one here. Okay, I need to see that this resistance is broken, and then I need to see it retrace here with a candlestick pattern, which is actually the entry, which is the MPE strategy. We have the market condition. We make it bullish, right? Once price breaks this high here, then it will be bullish. So that's your market condition. Then you have the price level, which is this level 1.2148, and then we have the entry. Now, obviously, I cannot show you the entry because it hasn't happened, right? We are preparing for the trading week, but do read the day trading guide on how to look for entry, which can be hammer, could be a shooting star, could be an engulfing pattern. Okay, so this is the bias for euro dollar. Now let's move into pound dollar. Now pound dollar is much clearer. So if I have to choose between pound dollar and euro dollar, I would choose pound dollar because it's just much clearer. At a glance, you can see that it's a clear uptrend because you have a high, you have a low, you have a higher high, higher low, higher high, higher low, so on and so forth. So this pound dollar, you should only be thinking of buying. You shouldn't even be thinking of selling because it's a very clear uptrend. So I have two key levels for you to buy, and of course you need to wait for an entry trigger in the form of a candlestick pattern. So the two key levels are 1.3735 and 1.35789. Okay, this is the recent low. Okay, you can see that this is actually resistance, and this one is kind of support and support. This one is the prior swing high that may act as support. So again, just wait for a candlestick confirmation pattern over here or here, and then you can enter the trade. Very straightforward, nothing much to say about it. So let's move on into the this dollar franc. So dollar franc is actually inverse of euro dollar. So if euro dollar is up, then pound franc should be down. But let's look at it because this dollar franc is quite interesting. You can see that the long-term trend is down. You have this low, high, lower low, lower high, lower low, lower high, so on and so forth. Okay, but if you were to zoom in into the recent price action, you will notice that there is an inverted head and shoulder pattern. Now, if you do not know what inverted head and shoulder pattern, in the day trading guide here, I believe I covered it as well. Okay, I don't think it's here. But yes, one of the patterns is a double top, double bottom, or head and shoulders, or inverted head and shoulders. So over here we see inverted head and shoulders here, and price actually broke the neckline. So somewhat in the short term is bullish, and more importantly, if you were to look at the low and highs, you will notice that there is a series of higher highs and higher lows. So you have a low, you have a high, you have a higher low, and you have a higher high. So the market condition is actually bullish in the short run. Now, I have two key levels that price is at currently, or rather two key levels for you to focus on. It will be this 0.891 level and this 0.8828 level. Okay, this level right here, on Friday, price closed at the level. So we do not yet know if this level is broken. So only on Monday, then we'll know whether price is going to go up or price is going to go down. But this level over here is what I call the make or break level. It determines whether you should be bullish or bearish. Now, of course, if price goes down, then the next level to look at is this level here, because this is actually the inverted head and shoulder pattern level. Okay, left shoulder, right shoulder. So this is a very key level. So again, it's too early to say which direction it's going, but based on the recent market structure, low, high, low, higher low and higher high, it's more likely to go up, but we need this 0.8917 level to be broken first. Okay, if you can see something like this, it breaks above and it retraces with a nice candlestick pattern, then we can go ahead to take the trade and target here as our take profit. Now let's move on to Aussie dollar. Just clear this first so it's easier. Okay, Aussie dollar, the long-term trend is up. So market condition, long-term trend is up. You have a high, you have a low, you have a higher high, higher low. So it's very clear up. However, the recent price action is kind of similar to euro dollar. Okay, because it's a USD currency pair, and most of the time the Aussie dollar moves the same as the euro dollar and the pound dollar. So you can see that this was a recent swing high. You have a low, you have a high, you have a lower low. So this key swing high level is very important, 0.776. This is a very important level. Now, we do not yet know if price will break it or it will be resisted. So very similar to the dollar franc example, if we want to buy, then we need to watch for price to go above and then retrace down and look for a buy opportunity. If not, we can wait for price to come down here and look for an opportunity to buy over here as well on the inverted head and shoulder pattern. Left shoulder, head and right shoulder. Okay, but right now where price is on Friday, it closed exactly at the resistance level. So right now is not a good time to buy because you are buying into resistance. So we need to wait for price to either break the resistance or retrace back to the next support. So long buyers for this one, just take note of the key levels. Now this is Kiwi dollar. So let me just clear this up first. So Kiwi dollar is a very similar to the Aussie dollar as well. It's an uptrend in the long term. But if you look at it since 12 June, which is almost been a month because today is the 14th of February, price has been consolidating between this high and this low. Now, there's nothing wrong with selling at high and buying at the low because in a ranging market, you want to be buying low and selling high. There's nothing wrong with that. But your highest probability is going to be sticking with the trend. And if you see that the trend in the long term is uptrend, right, as given by the series of higher highs, high, low, higher low, then your highest probability trade is going to be when price is at the support. So again, you can sell here or you can buy here. But my advice would be to focus more on this 0.71 level and try to buy off this level instead. Now, I also want to warn you against buying when price breaks this level, because what happens is that a lot of traders, they will buy when price breaks this resistance. But what happens is that there is still this resistance level. So there is a possibility that price might, goes up and come back down and just break down below. So if you're going to be buying, if you want to buy, my recommendation would be to wait for price to clear the entire zone of resistance first, and then look for a pullback into this level instead. Okay, do not buy somewhere here because you might just be buying into resistance given that there's a higher level over here. Okay, moving on to the dollar CAD. Dollar CAD, it's also another mess. Okay, this is the currency pair which I advise you not to trade because it's very messy. So similar to the Kiwi dollar, it's been consolidating for more than a month. Okay, consolidation started somewhere here, 5th Jan. Today's the 14th of Feb, so it's almost more than a month. So I have 3 key levels for you. The first will be the recent low here. And then after that, you have the recent high, and you also have this intermediate level over here, as given by this resistance here, resistance, and previous resistance turn, previous support turn resistance over here. Now, what we want to do is, if you want to buy, then you have to wait for price to come back down lower. Okay, but do be mindful that the long-term trend is still down, still trending down. So selling is going to be higher probability than buying. But of course, if you can get in at the support with a tight stop loss and the risk to reward makes sense, then you can go ahead to take the trade. There's no problem. But if you're selling, then just wait for a price to reject here, closer to here, or here. Okay, do not sell at the current price level because price is in the middle of the range right now. So please do not sell in the middle of the range because your strategy should be to sell at the top and buy at the bottom. Okay, remember that the 3 steps are MPE. Okay, MPE stands for market condition. So the market condition is ranging. So you want to sell at resistance, buy at support. Price levels, which is P, is given these 2 levels. And E, we need an entry trigger, which we do not yet have. So just watch out for that during the trading week. Same thing like the Kiwi dollar, you do not want to buy when price breaks out because from this level, because price might just go up a bit and start going down. Okay, so if you want to sell, look to sell here or sell here. If you want to buy, look to buy at the bottom here, or if price breaks the entire zone and retraces here. Okay, so that should be your trading plan. Now moving on to the dollar yen. Okay, dollar yen is pretty interesting because at the bottom over here, you can see that there is a inverted head and shoulder. There is a left shoulder here. There's a head and there's a right shoulder. And price broke above. You have a low, you have a high, you have a higher low and you have a higher high. So price is kind of like in an uptrend currently. So you want to lean towards longs, okay? You do not want to be shorting. Now, for longs, we have two key levels to buy it. It could be this 104.25 level or the 103.3 level. Okay, these two levels are very strong because this level is given by the previous swing high. You can see over here. And if you look to the left, this was a support. Okay, over here, this is a strong level because this is a recent swing low. And if you look left, this was also where price make a very nice bullish candle over here. So these are the two key levels which you should watch out for if you want to buy. Do not attempt to sell because right now the book structure is bullish. Okay, your market condition is bullish, so you only want to stick to buy. Okay, the price level has been given. Now all you need is patience. You need to wait at the key levels provided and look for an entry trigger. Now moving on to the gold, XAU US dollar is gold. Many of you love to trade the gold because you do not need much margin, but be very careful because gold is very volatile. And right now, the chart looks a bit messy. I don't like trading this and I don't recommend trading this, but I just want to give you the key levels just in case you really want to trade gold. So for gold, I only have two key levels, which is the 1862 level and the 1794 level. So right now, price is at 1824, which is in the middle of the range. So there's nothing that you should be doing because as I mentioned, in a range, you want to be buying low and selling high. You don't want to be trading in a range. Okay, so the market condition is a range. So buy low, sell high. So you can look for a short somewhere here and you can look for a long over here. Okay, I won't say much about this pair because it's rather straightforward and I would recommend you to avoid it actually. Now, if you really must trade, then this is the currency pair that I recommend that you focus on next week. Okay, number one, because there is news next week on this currency pair, so it's likely to move. And number two, because this currency pair is very clear. Okay, you can see that price is in a clear downtrend. So you have a high, you have a low, lower high, lower low, lower high, lower low. So it's a clear downtrend. And if you focus on the price action for last week, you can see that price broke out and retested this level very nicely. Breakout, retest. And on Friday, price retested this level as well. So this is a very nice setup. And if you were to look back historically, you can see that the next level will be here because during the ranging market over here, this was the bottom. So the next level will be over here at 0.86676. So it's quite some distance down. Okay, but do try to get an entry higher up so that you can have better risk to reward. Because I think if you short it right now, your risk to reward isn't that good. Let me just measure it. Yes. So if you were to short it when market open, your risk to reward is not so good. It's only 1:1.15, right? Normally, I recommend a risk to reward of 1:1.5. So if price retraces and you can get an entry somewhere here, and after that, maybe a doji is being formed or a engulfing pattern is being formed here, and you can go ahead to take the trade and short it down. But do watch out for the euro pound because a euro pound is one of the clearest setup, right? This is a setup I recommend. Right, you should avoid trading the this currency pair. Perhaps even this one you should avoid. This one you can trade if you want, but this is the highest probability setup which I see in the market. Okay, so that's it for this video, right? I hope you got value, right? Please let me know if these kind of videos are useful. I really love to hear from you because if you do not get value from such videos, then I would not create these videos. Or perhaps there's a currency pair that you want me to analyze, right? It could be a currency, it could be the index, it could be a commodity. Just let me know what you want to see so that I can create more videos, more helpful market analysis videos to help you in your trading journey. Okay, so thanks for watching. If you're new, make sure to subscribe to the channel and download your free day trading guide. Okay, so that you can actually apply this on your own. Thanks for watching. I'll catch you in the next video.